So welcome back. We're now going to escalate this a little further. Hopefully you've seen the previous two videos. At this point in educating myself to trade, I'd started to obviously zoom out and look at the bigger picture. And I've added a few more multiple lines as to the formula that I was showing you earlier. I fully appreciate that this just seems a bit like, surely how can he just be placing lines at tops and bottoms of where there's shapes? I'm personally no economist, and you're probably no economist. Predominantly majority of you watching this video are trying to find an edge in the market to create a way to dictate the way that gold's moving. This is still very early days of how I was educating myself. But what I was realising was when the 1 hour candles were open and closing across these lines that I was basing on these mountains here and like valleys down here, that on a 1 hour candle, when it opened and closed crossing it, such as here, there's a good chance it was going to go on to the next and vice versa. Now, this is only a short video, so it's just a quick explanation really. I've taught lots of people this strategy now, and we go into it in depth, and it's extremely profitable. But what I'm trying to do is give you guys an edge to be able to go and look at something else or look at gold and educate yourself. Obviously, if you want me to teach you, that's not a problem, but some people get a lot of satisfaction out of creating something themselves. So the main principle at this point is creating lines. Once we've created lines, we want a candle open and close over a line. The trouble is we've got lots of movement in different directions. So at the moment we need to create a way to give us an edge in the market. Now, I'd never really thought about having an edge in the market up until now. I was just desperate to make money, absolutely desperate. And to be quite honest, I wasn't really too bothered about the losses along the way. My brain didn't function like you put £5,000 in this week and you've topped up with £2,000, you only got £1,000 left, but you had 3 trades that made you 600 quid. I'd be really happy with those 6 trades. I wouldn't even be thinking about the losses, which was really daft. So we got to a point where we want an edge, and I was researching, and I was just, like I keep saying, YouTube, Reddit. I'm not really one for reading books, but what I came across was this. Just a random little indicator, right? Completely free of charge, and I was like, wow, actually, look, it's creating support and resistance for me, and I can see they're kind of like at a similar sort of level. But what it wasn't doing is it wasn't calculating how many touches we had in that area. So if you look at this green line across here, it's based on both of these like kind of mountain tops here. This indicator was just showing at a short period of time, so it kind of reassured me it wasn't good enough to trade. So I binned it off. But it was enough to give me a bit of confidence in what I was doing. Trading Fuse full of free indicators. None of them were any good. I'll never come across any good ones. But sometimes they're good in a way that it reassures you what you're doing and you're trying to escalate is a bit better. But what I did start using was 2 simple moving averages. And I just Googled, give me an edge in the trading market with gold. How can I dictate the market condition? Now, obviously you can probably see all my little white letters on here. S stands for sell, B stands for buy. And predominantly, what I'm looking is every time the 2 moving averages and their lengths are 50 and 200, they're completely free of charge. You just go to indicators and type in SMA. They will appear on your chart, and then you just change the length in here and you can change the colour. When the 2 overlapped here, I could see it been in a buy market. The market then goes on to a sell trend, and then when they overlap again, it's a buying trend. overlapping again, sell trend, overlapping again, a buying trend. So predominantly, I said to myself, right, well, if that's the case, let's look at the market. And you can backtest this all the way to 1833. When they overlap here, we're in a selling condition. If I only took sell positions and not buy positions, I was trading with a market trend. Yes, there was buy opportunities in that period. But what I was doing is I was eliminating the process of stop losses. I was trying to take out stop losses. So by buying and selling with the market trend, it gave me a real edge in the market. Instead of taking 20 positions a week and maybe 14 trades hit and take profit, this was then taking me to a position where I might only be taking 10 trades in a week and 9 a hit and take profit. And I was like, wow, this is serious now. This is starting to look like something that could potentially work. And to be quite honest, at the point, I was a little happier than I made that sound. But one thing I did notice was I had some images last year on my phone that I sent to Gold Trader Mo of some trades that he'd sent me. Some signals, and I had placed on my account. And I found these images, and I looked at the time and the date, and I went back and I looked on my trading chart at where gold was at the time. And in this, say, market condition here where they overlap for a sell, he'd sent me loads of buy trades. I eradicated the buy trades during this period, and all the trades that I had from him were predominantly over the course of it were losses. If he had used this in his thinking, he would have eradicated a lot of his losses. So the analogy I use for this is it goes to football. Say, for instance, Man City at home to Leyton Orient in the 6th round of the FA Cup, and Leyton Orient are 6-0 down at half time. You wouldn't put £100 on Orient to beat Man City over 90 minutes, right? And I started to notice that if I'm buying in a selling market, I'm giving my money away. And this just created that edge to reassure me, look, a sell position has opened. Let's go with that position. A buy position is opened. Well, we're in a sell market. Let's leave that market well alone. Let's not go down that route. Let's just keep that a little bit more simplified. Let's control what's going on in our heads. Let's control those emotions, because this backtesting was super profitable and it was super easy. The trouble you have is what goes on in here, and emotions get the better of us. There's time and time again where even I could start to dictate market trend, I was jumping in the market and bending my rules. So we have to keep things very, very simple. Now, I think that's enough for one video. So if you could subscribe, like the post, and then in the next video I'll indulge into this a bit more and show you how I had to kind of deal with the emotions and to realise when gold was overbought or undersold.